Hello guys, hi, how are you all? I hope you're all doing good. I'm your CA Rajavardhan from Mishas Academy. In the past, I had asked you to mention those topics on which you would want me to come out with a video to help you in your exam preparations. One topic that's been most asked is a master question on depreciation chapter. You guys have repeatedly asked me that you find it a little difficult to solve questions which involves provision for depreciation as well as disposal account in the chapter of depreciation. So in today's video, we'll be solving the master question on depreciation. This question is from ICI study material, practical question number 1. This is a question where there are several assets. For all of the assets, they've given the split of the opening cost and provision for depreciation till that date. Some of the assets are fully exhausted. They want you to account for sale of some assets, purchase of some assets, part sale of some assets, as well as disposal account for the same. So why waste time? Let's get started and solve this question. This is again question number 21 from our Yasha study material. If there is any other chapter, any other unit, any other question that's bothering you, please do let me know either by way of comments to this particular video or by way of our usual communication that is on Telegram. And once you do that, within very less time, I'll definitely get back and then do a video on the same for all of you. So why waste time? Come on, let's get started. As I was mentioning, let me just quickly show you the question. So this is the question from ICI study material, practical question number 1. So this is from page number 5.27 and 5.28. Same question is there in our Yasha study material also, illustration number 21, and we are now going to solve this illustration number 20. Let me take you through the question. There is several assets which are purchased in different years starting from 1998 to 2014. But right now, as of date, they are asking us to prepare plant and machinery account as at 31st of December 2015. So pen is too thick. Let me reduce this thickness. Yeah. They want us to prepare machinery account for year ending 31st of December 2015. Two understandings here. Point number 1, we need to remember that our year ending is calendar year. We're following calendar years for accounting and not financial year. The second point is all that we are concerned is year 2015 only. We are least bothered about 2014, 13, 1998 or 2016. We are only concerned about 1st of January 2015 to 31st of December 2015. If we do any computations for a period prior to 2015, it is only to find opening balances for 2015 opening date and no other intention. I hope you will keep that in mind. Yeah, several assets balances are given. What we need to note with regard to this first asset is that have a look at the first asset. Cost of the asset is 2 lakh. Depreciation provision of the asset is 2 lakh. So this asset is completely depreciated. So there is no depreciation to be charged on this asset. If we charge any more depreciation on this 1998 purchased asset, accumulated depreciation on this asset will exceed the original cost of this asset, which will in turn make the asset value negative. Have you ever seen asset being visible in the balance sheet asset side at a negative amount? Definitely no. So asset cannot be negative. Depreciation on the whole cannot exceed the cost of the asset. So this asset cannot be depreciated. Even if this asset is sold, cost of the asset sold, book value of the asset sold will be zero. Entire sale consideration will become profit. If this asset is given away by way of scrap, that is for 0 rupees, there is no profit, no loss. Why? The book value of the asset has become 0. So even if it doesn't realize anything, there is not going to be any loss. Let's see the next asset. Again, asset which was purchased in 2004, original cost of the asset is 3 lakh and the entire 3 lakh is already depreciated. So the book value of the asset remaining is 0. There would be no depreciation on this asset. If the asset is sold for a consideration, entire sale consideration will become our profit. If in case the asset is scrapped, there is not going to be any profit or loss. Got it? Come to the asset which was purchased in 2005. Original cost of this asset is 10 lakh. However, the depreciation provision is 9 lakh 50. So on this asset, we can further provide depreciation. But that further provision of depreciation is subject to a limit. We cannot provide depreciation exceeding 50,000 because original cost is 10, accumulated depreciation is 9 lakh 50. So depreciable amount is 50,000. If in case I depreciate this asset by an amount exceeding 50, then provision for depreciation will become more than 10 lakh, making the total value of the asset in the balance sheet negative, which is again impossible. I hope you are understanding. So the maximum possible depreciation on this asset is 50,000. In this question, they are mentioning that the depreciation rate is 10%. So though the depreciation rate is 10% on original cost method, I can't do 10 lakh into 10%, 1 lakh as my depreciation. Though the depreciation is at 10%, I can't depreciate this 10 lakh assets as 10 lakh into 10%, 1 lakh. Because if I do the same, depreciation for the current period becomes 1 lakh. Existing accumulated depreciation is 9 lakh 50. To that, if I add this 1 lakh, total accumulated depreciation will become 10 lakh 50,000. 10 lakh 50,000 of accumulated depreciation exceeds the original cost of the asset, which is 10 lakh. If we deduct which, the value of the asset in the balance sheet will become minus 50. An asset cannot have negative balance. So it is incorrect for us to depreciate this asset for an amount exceeding 50,000. So though the depreciation rate is 10%, we can provide depreciation only up to 50,000. That is half year. This might be because when they say 10% depreciation, we can understand that the useful life of the asset is 10 years. If we purchase the asset at the beginning of the year, we can depreciate it for 10 full years. What if the asset was purchased in the middle of the first year? So in the first year, we provided 6 months depreciation. Next, we'll provide 9 full months depreciation. And in the 10th year, we cannot provide entire year depreciation. We need to provide only half a year depreciation. The reason is already half year is provided in year 1. So 9.5 years of depreciation is done. Now we need to provide for zero point 0.5 years of depreciation to close this asset. That's the thing that you should remember. And this 2006 asset can be royally depreciated by 70,000. Still, there will be some value left. And I'll put a tick mark saying that these assets can be depreciated. And so is this asset which can be depreciated. So is this asset. This can also be depreciated. So three important points: 1998 and 2004 purchased asset cannot be depreciated. Asset which was purchased in 2005 can be depreciated, but not for an amount exceeding 50,000. Technically, if you consider 10% depreciation, we're providing only half year depreciation. Remember this. This need not be written in the examination. However, I'll show this to you by way of a working note so that you would find it no difficult when you are preparing for your exam. Means the day before exam when you do it, you will not find it any difficult. 1998 asset which was purchased in 1998. 2 lakh is the original cost. 2 lakh is the provision for depreciation provided. Book value is 0. Depreciation cannot be provided. And the asset which was purchased in 2004, 3 lakh and 3 lakh. Original cost 3 lakh. Provision for depreciation 3 lakh. Book value again has become 0. Again, so this asset cannot be depreciated. Let us go to the asset which was purchased in 2005, 10 lakh and 9 lakh 50. Book value is 50,000. Depreciation can be provided, but it is conditional. I put a star mark there. It cannot exceed 50. 2006 asset 7 lakh and 5 lakh 95,000. This asset there is still 1 lakh 5,000 amount left. Current year, even if you provide 10% depreciation on 7 lakh, which is 70,000, still you will be left with 35,000. So this year you can provide full depreciation. The subsequent year you can provide half depreciation. That is 70 divided by 2, 35, which totals to 1 lakh 5. 1 year later you purchase this asset, no, isn't it? That's the reason. 2013, 5 lakh and 75. So 4 lakh 25,000 worth of book value of the asset is still remaining. This can be depreciated. After that, 2014, it is 3 lakh and 15,000. 2 lakh 85,000 of book value still remaining. This asset can also be still depreciated. We'll take the totals 30 lakh and 21 lakh 35,000. I've given it to you clearly here, saying that this working note, whatever we just did, need not be written in examination. You don't have to write this in examination. Just have to remember this point. Let's come read the remaining part of the question. Depreciation is to be provided at the rate of 10% per annum. We'll do that. Original cost. That is the reason they're telling it on cost. Let us do it on cost. Not an issue there. And what do we have after that? The company's policy is to assume that all the purchases, sales or disposals of plant occurred on 30th June. So they have not mentioned the specific date on which the asset is purchased or the date on which asset is sold or disposed, we'll always assume that asset is purchased, sold or disposed in the middle of the year. So for purchase of the asset, we need to provide depreciation for half year. That is the second half of the year. For the sale of the asset, before we identify the profit or loss on sale, we need to identify the book value of the asset sold. To determine the book value of such asset sold, we need to provide depreciation for 6 months. The reason why we need to provide depreciation for 6 months is that this asset is sold at the middle of the year, meaning asset is used for half of the year. Asset is used for first 6 months of the year. Because the asset is used for first 6 months of the year, we need to provide depreciation for 6 months, and only after that we can start disposing the asset. Got it? Then okay, irrespective of the precise date on which this event has occurred, so we don't care about the date. During 2015, that is the year for which we are supposed to prepare machinery account, provision for depreciation and disposal account. Purchase of plant and machinery amounted to 15 lakh. So 15 lakh worth of asset is purchased during this year. So here we have details in 2014. 2015's details is not given in this table, that is given here, and this is what we need to account for. Okay, after that, I made some hot BC dosa and had it now, so thirsty because of dosa. Okay, plant had been bought in 2004 for 1 lakh 70 was scrapped. In 2004, you didn't buy the plant for 1 lakh 70. You bought the plant for 3 lakh. So you need to split that 3 lakh into two parts, 1 lakh 70 and 30. 1 lakh 70 and 1 lakh 30. 1 lakh 30 worth of asset is retained. 1 lakh 70,000 worth of asset is sold. Remember that entire asset is written off completely. So entire sale consideration, whatever would be received, will become our profit. So we would split it into two parts and it is scrapped. So there is no sale consideration received. 0 rupees is the sale value. So original cost of the asset will decrease by 1 lakh 70. Provision for depreciation will decrease by 1 lakh 70. There is no profit, no loss, no cash consideration. Should we provide depreciation for 6 months? No. Why? Asset which was purchased in 2004 is already 100% depreciated. There is no room for depreciation. Then plant had been bought in 2005 for 90,000, was sold for 5,000. So in 2005 we have this 10 lakh. We need to split it into two, 90,000 and 9 lakh 10. 9 lakh 10 worth of the asset will be still retained. 90,000 costing asset will be disposed, sold, isn't it? Yeah, sold. We need to provide depreciation for first 6 months also and then sale. For that 90,000, we need to identify how much of this 9 lakh 50,000 by depreciation is allocated. So basically 10 lakh will be split into 90 and 9 lakh 10, and 9 lakh 50 also will be split into how much of it for 90,000 worth of asset, how much is for 9 lakh 10,000 worth of asset. 90,000 worth of assets proportionate depreciation, what is there in provision for depreciation, will be written off and the balance portion will be held upon. And balance portion will be held upon. We identify the book value after providing depreciation for 6 months in the current year, and then identify profit or loss on sale. Then last asset, 2006 asset, what was bought for 2 lakh 40 is sold. Again for 2006, 7 lakh will split into 2 lakh 40, 4 lakh 60. Provision for depreciation also should be split as to how much relates to 2 lakh 40, how much relates to 4 lakh 60. So that 4 lakh 60 provision for depreciation will continue. On 2 lakh 40, whatever depreciation is there, we deduct it. We deduct the current year depreciation also for 6 months. After that, we get the book value of the asset sold. Sale value is 15. We determine profit or loss on sale. And remember, all of this accounting should happen in disposal account, meaning original cost of the asset should be transferred to disposal. Accumulated depreciation on the asset sold should be transferred to disposal. Sale consideration should be written in disposal. We get the profit or loss on sale of the asset in disposal account. Got it? That's it. I think we're done with the question. Calculate provision for depreciation, and keep in mind that the company has to show profit or loss in sale or disposal account. We'll do that, and they want us to maintain it separately. You are required to prepare plant and machinery account at cost, depreciation provision account, sale or disposal of plant and machinery account. They have not asked for depreciation account. They only asked for plant and machinery account. depreciation provision account, sale or disposal of plant or machinery account. However, we will do one more additional account called provision for depreciation. Got it? Come on, let's get started. So first we'll do working note for 1998 asset. So I'll just mention the same to you. Asset is purchased in 2015. Oh, sorry, we'll do first working note. First working note is asset purchased in 2015. 15 lakh is the value of asset. What is asset purchase? 15 lakh. We need to provide depreciation only for 6 months. So if in case I do that, it will be 15 lakh into 10% into 6 by 2. That gives us with depreciation of how much? 75,000. So remember that for the asset purchased in 2015, we need to provide for only how much depreciation? 75,000 depreciation. For this, if you would have to write the entry, the entry will be, we would have to write the opening balances before we write anything else in machinery account. Balance brought down. That is just the total. Total is how much? 30 lakh original cost, 21 lakh 35 provision for depreciation. 30 lakh original cost brought down. And in provision for depreciation account, same date. I'll write by balance brought down 21 lakh 35,000. By this, I think we're done with the opening balance. As we're done with the opening balance, now I can easily write this purchase of the assets entry. So what is the entry for purchase of the asset? Asset account debit to cash. Machinery will be increasing, machinery will be debited. Cash is the asset decreasing, I will credit it. So I'll write here to cash account. This is on the middle of the asset purchase. Value is 15 lakh. On this 15 lakh worth of asset, we are depreciating. When we depreciate, what is the entry? Depreciation is an expense, it will be debited. Credit will be given to machinery because machinery value will decrease. Entry is depreciation account debit to machinery account. So in depreciation account, I'll write by machinery. I'm sorry, in depreciation account, I'll write to provision for depreciation. We are not writing to machinery. Usually we write the entry depreciation to machinery. When we write it through provision, we write depreciation to provision. Provision will remain separate. So here I'll write to provision for depreciation. This is on the asset. We need to depreciate 1998, 2004, 2005, 6, 13, 14 and the asset purchased in 15. For the asset purchased in 2015, depreciation is 75,000. Got it? Then let us go down to the first adjustment. First adjustment is done. Now we'll do the next adjustment. So what is the second adjustment? Plant and machinery had been bought in 2004 for 1,70,000 has been scrapped. Let us go ahead here, do a working note. So for the asset that was purchased in 1st of January 2015, original cost of that assets is totally how much? 3 lakh. In that, asset scrapped is 1,70,000. So the asset retained will be 1,30,000. How do we get that? 3 lakh minus 1,70,000. So 3 lakh is the total book value of original cost of the asset. In that, asset with original cost of 1,70,000 is scrapped. So the part of the asset what is retained is 1,30,000. Now let us see the provision for depreciation on this asset. Provision for depreciation against this asset which was purchased in 2004 is 3 lakh rupees. So again if I split that 3 lakh, it will be 1,70,000, 1,30,000. So book value of the asset is 0. If in case this asset is sold in the middle of the year, there is no point in providing depreciation because the asset is already 100% depreciation. Now I'll say sold. How much of it is sold? 1,70,000. For what value? They mentioned in the question that this asset is scrapped. Scrapped in the sense, this asset is fully depreciated. So when you give it to scrap, tukali angadi, gujri angadi, what do we get? We get 0 rupees. We don't get any consideration. So 0, there is not going to be any depreciation for the asset which is retained also because that is also fully depreciated. So the book value of the asset is 0. So what we need to do is 1,30,000 worth of asset is still there with us. Original cost of asset will be there in the machinery account. Accumulated depreciation will be there in the depreciation. However, asset whose cost is 1,70,000 is disposed. So 1,70,000 has to be decreased from our original cost and 1,70,000 has to be decreased from our provision for depreciation also. I'm getting it. I'll tell you the journal entry. So journal entry without disposal account will be cash account debit 0 to provision for depreciation 1,70,000, machinery 1,70,000. This would be the entry without disposal. If you write the entries with disposal, we need to write disposal account debit to machinery 1,70,000, 1,70,000. Machinery is getting transferred to disposal. On this provision for depreciation, whatever is there, 1,70,000 will also be transferred to disposal account. So the entry is provision for depreciation account debit to disposal account 1,70,000 and 1,70,000. Let us write this. In machinery account credit disposal, in provision for depreciation account debit disposal. So this is our machinery account. Because the asset is scrapped, the value of the asset is decreasing to the extent of 1,70,000. Sorry, 5 lakh. One moment. 2004 asset 1,70,000. Ouch. 1,70,000. Correct, got it? So machinery account there is decrease in the value of the machinery by 1,70,000. And I have written here by disposal. So in disposal account, on the debit, I would write here to machinery 2004 1,70,000. Against this asset, provision also should be written off. So in provision for depreciation, we have 21,35,000. Among that is depreciation provision relating to an asset purchased in 2004 to the extent of 1,70,000, which is written off. So in provision for depreciation, I'll write to disposal. And in disposal, I should write by provision for depreciation. 2004 asset 1,70,000. I have written the journal entry without disposal. I wrote the journal entry with disposal, and same journal entries I have implemented here. I hope you all understood. Then we have plant that had been bought in 2005 for 90,000 was sold for 5,000. So 2005 we had a plant of 10 lakh. Let us do one working for this. In 2005 we had plant worth 10 lakh, and all I am going to do against that plant at this point of time is original cost being 10 lakh. Part of the asset which is sold was amounting to the extent of 90,000. So I'll say cost of the asset sold is 90. Cost of the asset retained will be 9 lakh 10. That is 10 lakh minus 90,000. And against this asset, how much is the provision for depreciation? Provision for depreciation for an asset purchased in 2005 is 9 lakh 50,000. So let me write here 9 lakh 50. 9 lakh 50,000 has to be proportionately allocated between these two. If it is 90,000 out of 10 lakh, then how much is it out of 9 lakh 50? 9 lakh 50 into 90 divided by 10 lakh. Proportionate allocation. And 9 lakh 50 into 9 lakh 10 divided by 10 lakh. If in case I do that, I get 85,500 and 8,64,500 as the proportionate accumulated depreciation on these assets. After deducting the book value of the asset will be 50,000 in the total, and individually for the asset sold it is 4,500, and for the asset retained it is 45,500. This asset which is sold in the middle of the year, that is 30th of June 2015. So I need to provide for depreciation till 30th of June 2015. But the depreciation has to be provided on the original cost of 90,000 at 10%. So depreciation at 10% on 90,000 for 6 months gives us 4,500. If I do which, the balance part of the asset is sold. 4,500 minus 4,500 is 0. So the book value of the asset has become 0, and this asset is sold for what value? It is sold for 5,000. So book value of the asset sold is 0. Asset is sold for 5,000. Can I say entire 5,000 is my profit? I hope you agree. And this asset further has to be depreciated at the end of the year, 31st of December 2015. Depreciation on this asset will be 9,10,000 to 10% for entire year. 9,10,000, yeah, but 9,10,000 into 10% will come to 91,000. We cannot provide depreciation as 91,000. If I provide 91,000 depreciation, my asset will become minus 45,500. I can depreciate only half. You remember we discussed this asset can be depreciated only for 6 months. So I need to provide half year depreciation. If I provide 91,000 depreciation, my asset will become negative. So this asset's book value is 0 after sale. What I need to do now is, first I need to write the sale entry. Let me show it to you. The journal entry for sale is cash account debit 5,000, and on this asset provision for depreciation is, previously provision was there at 85,500. Further, we depreciated the asset in the current year for 4,500. So the depreciation on this asset will be 90,000. Am I right? So depreciation on this asset will be 90,000. This asset is sold for, sorry, the original cost of the asset is 90. So 90,000 worth of asset, which is 90,000 depreciated, is sold for 5. So the difference of 5,000 is our profit. So the journal entry for sale will be cash account debit 5,000, provision for depreciation debit 90, asset account credit 90. That will match. So 5,000 what is received is profit. So this is the accounting entry. Have a look at it and please do try to understand. If in case you do have any doubt, you can always get in touch with me. In the link to this video, I have dropped in a link. So in the description to this video, I have dropped in a link. If you can access that link, you will get access to our what do you say compilation of past examination questions and answer, our classroom discussion file, our doubt discussion channel, and every other link is pinned within that link. So please do click on that link and then get in touch and ask me if you have any doubts. You can find me on Telegram. Search for the word accountsman, ACCOUNTSMAN. Search for me on YouTube with the same name or on Instagram with the same name. You will be able to find. Got it? Now we'll split this entry into disposal account later. First, I need to transfer the asset to disposal. So I'll write disposal to machinery 90,000, 90,000. Then I'll transfer the accumulated depreciation against this asset to disposal account because this asset is no longer there. I'll write provision for depreciation to disposal, which is again 90. I'll write the cash consideration of 5,000 rupees received to disposal, and the balance and figure in disposal account will be disposal to P&L 5,000. Because if you observe, machinery had debit balance of 90, I have credited here, it becomes 0. Provision for depreciation had credit balance of 90, I have debited here, it will get nullified. Cash is received, I have debited it. Disposal account debit 90, disposal account credit 90. This has nullified. Disposal account credit, what we have written here, has to be closed by debiting and transferring such balance to profit and loss account. Now let us post all of these 4 entries into our ledgers. Shall I? In machinery account, I'll write by disposal 90. Come on. In my machinery account, I will write here 2005 asset 90,000. And against this asset, depreciation also has been fully written off. Provision for depreciation 2005 90,000. And both of them, whatever written in machinery and machinery provision for depreciation, has to be written now in disposal account. So here I'll write 2005 90, 2005 90. Both provision and machine both are decreasing. Consideration received has to be written here by cash account. For 2004 asset, there was no consideration received. For the asset which was sold in 2005, we received 5,000 consideration. This 5,000 worth of consideration what we received is profit. So I'll write in P&L account. I'll write here 2 P&L account 2005 5,000, 2004 0. I hope you guys are understanding. This Excel sheet where I'm solving this answer is also available to you. You can have a look at this, not just the answer to this particular question, but answer to all the questions from all the chapters that is there in your material. How to access this? Same old thing. Go to the description of this video. You will find a link. You need to click on that link. When you click on that link, it will be written as Master Solution Sheet. This is the name of the sheet for under CA Foundation tab. If you click on that, you will get access to this Excel sheet. I'm going to give you all the resources away free of cost and not expecting any consideration from your side. The only consideration that is expected from your side is your good marks in the exam and then you going ahead for CA intermediate, pursuing your dream of becoming a chartered accountant. Got that? Next, let us go to 2006 wala asset. Plant has been bought in 2006 for 2,40,000, was sold for 15,000. So 2006 now, the value of the asset purchase is 7 lakh. We are going to split that asset into 2 parts. Have a look. 1/1/2015. Original cost of the asset is 7 lakh. So we split into 2 parts. 2,40,000 and the balance is 4,60,000. On this asset, there is provision for depreciation to the extent of 7 lakh, right? 5,95,000. This again has to be proportionately divided. 5,95,000 into 2,40,000 by 70. That would give us 2,04,000, leaving us with book value of 36. Similarly, I would do 5,95,000 into 4,60,000 by 7 lakh. That would come to 3,91,000, leaving us with book value of 69,000. So this is the book value of the asset. only this 36,000 book value worth of asset is sold on 30th of June. So we need to provide depreciation till 30th of June. Depreciation is provided at 10% under original cost method. So I need to do 2 lakh 40 into 10% into 6 by 12. That would give me depreciation of 12,000. If I provide wage, whatever is the value of the asset that is there, that is sold, 36 minus 12 is 24,000 is the book value of the asset sold. 24,000 is the book value of the asset. So it is sold for what value? 24,000 worth of asset is sold for 15,000. So there is going to be 9,000 loss. Am I right? Let us provide depreciation on this asset retained for the end of the year. That has to be depreciated for 6 months again. No, not 6 months. Entire year. I'll do 4,60,000 into 10%. That is 46,000. You can depreciate the same. And I'll identify the book value. This is become 0. This is become 14 plus 9, 23,000. So 23,000 is book value of the asset retained. Now, for the sale of the asset, we need to write the journal entry. Let me write the same. First, cash account debit. How much is the consideration received? 15,000. Provision for depreciation debit. What is the value of the provision that is decreasing against this asset sold? Previously, it was there at 2 lakh 4. Current year, we provided further depreciation of 12,000. Can I say totally 2 lakh 6, 2 lakh 16,000 is the provision for depreciation that we're writing off? And the original cost of the asset which was sold is 2 lakh 40,000. So now identify the balance in figure. 2 lakh 16 plus 15, 2 lakh 31, 2 lakh 40. Difference of 9,000 is loss. Or you can see here 24,000 worth of asset is sold for 15,000, so 9,000 loss. Now we'll split this entry into disposal based accounting. I'll first transfer the asset to disposal account. Entry will be disposal to machinery 2 lakh 40, 2 lakh 40. Then I'll transfer my provision for depreciation to disposal. Entry being provision for depreciation to disposal 216, 216. Then I'll write the cash consideration received. Cash to disposal 1550. Then loss will be debited to P&L. P&L to disposal 9,000, 9,000. This is how our accounting will be. I should now post these entries to our respective ledger. In disposal account, I'll write 2 machinery 2 lakh 40. Come on, let's go ahead. In disposal account, I'll write 2 machinery 2006 machinery 2 lakh 40,000. And in our provision for depreciation account, sorry, in machinery account I didn't write 2006 2 lakh 40. And in provision for depreciation, I'll write 2006 asset 2 lakh 16,000 is the accumulated depreciation written off, including 6 months depreciation in current year. And next up, I'll write your consideration received 15,000. Then I'll write loss of 9,000. Or loss of 9,000 has to come here. By P&L 2006 9,000. This will go to P&L account debit side. And by this, we are done with the entire adjustments. We have forgotten one thing. We need to provide depreciation for the 6 months on the asset which is retained. That is 46,000. That I had forgotten. I'll write entry for that. Wait and observe. Entry for that is depreciation account debit. So to provision for depreciation. That, my friends, is for the asset purchased in. For the asset purchased in 1998, no depreciation, fully depreciated. 2004 asset, no depreciation. 2005 asset is again depreciated during the current year to the extent of how much? 50,000. 10 lakh was the original cost. 9 lakh 50 is WDV. We depreciate now. Remaining 50,000. 2006 asset 7 lakh and 5 lakh 95. 2006 asset there is sale, right? Yeah, current year my depreciation against the asset which was sold in 2006 and retained portion also is 12,000 and 46,000. So totally 58,000 depreciation. Let me write 58,000 depreciation. That is depreciation provided during the year. Okay, 58,000. And for 2013 asset, it is not sold and there is nothing happening. On entire 5 lakh, we need to provide 10% depreciation, that is 50,000. And on asset purchased in 2014, 3 lakh by 10%, entire year 30,000 depreciation. Done. So asset account where everything else is written. Purchase is also done. All we need to do is identify the closing balance. 45 lakh, 45 lakh. Here total is 2 lakh 40 plus 90 is 3 lakh 30, 4 lakh, 5 lakh. If I deduct 5 lakh, I'll get 40 lakh. This is the original cost of the asset as balance sheet figure. Scroll down to see provision for depreciation account. 21 lakh 35,000 is the point, and there is no other further depreciation. Let me take the total here. That would come to 4 lakh 76. Let me write 21 lakh 35,000. There is one item missing. Current year depreciation we didn't write. In our depreciation account, we have depreciated all of this. No, we need to take the total. 2 lakh 63 is the total, right? Yeah, and this depreciation should be transferred to provision for depreciation. 2 lakh 63, no, transfer to P&L account here, but here we have written debit as what? Depreciation account debit to provision for depreciation. In provision for depreciation, I'll write current year depreciation 263. Now I'll take the total here, which comes to 2398. From 2398, if I deduct 4 lakh 76, I'll get the balance carried over in my provision for depreciation account as 19 lakh 22,000. And after that disposal account, this should get closed because we've already tallied it day to day wise. So 1 lakh 70 plus 90 plus 2 lakh 40, 5 lakh correctly total. 1 lakh 70 plus 90 is 4 lakh 70 correctly to 76 correctly total. Here I'll write 20,000 correctly total. This would be 9,000, and here I'll write 5,000. And if I do the total, here is 5 lakh 5. Here total is 4 lakh 96 plus 9, 5 lakh 5. The disposal account is also correctly totaled out and nothing's remaining in this. And we've done working note number 1, which need not be done in the exam. Working note number 2 for 2015, 2004 is working note number 3, 2005 is working note number 4, and 2006 is working note number 5. This calls for the end of the answer. Few pointers that I want to tell before I wind up. This question may we need not do working note number 1, and from working note number 2, 3, 4, 5, journal entries are not required to be written in the examination. You can skip journal entries, and in the ledgers you don't have to do depreciation account. They have not asked you to do depreciation account. I did depreciation account for your understanding, just for your understanding. Got that? And before I wind this up, all I want you to know is I've solved this video because you guys asked me to do it repetitively. If you see the last 11 attempts of CA Foundation, never has been a question on depreciation chapter which includes provision or disposal. So they won't usually ask a question including disposal and depreciation with provision at CA Foundation level. But however, you should be knowing this because when you come to CA intermediate level and you start doing questions on cash flow statement, questions on incomplete records or any other topic, if you don't know the concept of provision for depreciation, you will be stuck. You can't come back to foundation to learn it, and you can't skip it in CA intermediate. So you will be in a very poised situation. So I taught this to you in detail in class by doing detailed journal entries, understanding how is it going to have same impact as without provision and everything. And I've also done it because you asked for it. However, if you have not read this and if you are there 30 days before your examination, then don't break your head on this topic. Go out with the rest of your preparation. You will still be able to ace 100 on 100 in the exam. Hoping that there would be no question on provision for depreciation and disposal in examination. However, you guys have been taught and then you guys are prepared for the same. That's it, guys. I hope you learned something new and had a little fun. Please don't forget to like, share, and then comment on this video. And also let me know what other topic do you want me to cover in the upcoming videos. There is also marathon revision for CA Foundation, which is recently recorded for those who didn't attend face to face. Please do watch that. Makes the maximum utilization of that. Coming up with a lot of other things for CA Foundation aspirants writing examination in the month of June 2023. So make utilize of all that. Follow me for more updates. Remember, life is not a battle to be struggling, it's a game to be enjoyed. Till the time you're learning something, you're having fun. It's all good. The day you guys either stop learning something or stop having fun, trust me, you might start struggling because you might be in a battle. So thumb rule to stay happy is pretty simple. It is to stay in the game. So for one last time on this day, I have just one simple question for all of you. Are we in the game? I hope the answer is yes, we are in the game. See you all in the next one. Till then, stay in the game. Bye bye. Tata. Take care. Get lost.